Danielle, can you hear me and see my screens? Excellent. You just saw me on Sullivan's Exchange show? Yes. Thank you, Jack. Thank you. Yeah, I just finished up with CNBC and now I'm getting started the Simpler Central trading room. So today, for a special edition, I'm actually broadcasting this to my Twitter feed as well. So if I make any outside references, that will be why, just to give a little bit of explanation for those people who are joining on social media. Good morning. Good morning. FOMC minutes. Most policymakers noted risks of easing too quickly, emphasize importance of incoming data and judging if inflation is moving sustainably to 2%. Yep. All right, so let's go ahead and start off with some requests while we're waiting to see what the reaction is to the FOMC minutes. I will tell you what I'm going to cover today. I'm going to start off by talking about the indexes, seeing which direction this is going. I'm going to do a read on the market internals. I'm going to see if I'm getting a good vibe for an end of day trade in the SPX. It is going to be a little bit early for that, but especially towards the end of my session, I may get a little bit better of a vibe on it to see what we can do. And then I'm definitely going to focus on NVIDIA, and we're going to be looking at earnings as well. Any other additional companies that are reporting earnings. I did just discuss Lucid and Rivian in CNBC as well. And, it's great because whenever I'm on the show, they come up with, variety of stocks that I can look at. And sometimes it gives me some additional ideas. So we're going to look at those too. So as far as the request line is concerned, let me go ahead and start making a list. And I'll make sure that I get to those throughout the course of the session. Am I coming to Las Vegas? I am not coming to Las Vegas. So I normally try to make the money shows, especially in Las Vegas. But I just bought a house a couple months ago and things have been really crazy for me because I've been moving. I was in the process of moving cross countries. So I was just not able to fit an additional trip into my schedule. So I'm not going to be at the money show in Las Vegas this time, unfortunately. But I am considering going in August. There's another one in August. And I'm also considering going to the one in Toronto because my friends over in at Trader TV Live are in Toronto. So I'm considering both of those. What happened to PA and W? Yeah, so that got completely hammered. I'll definitely look at that one as well. I did not make the right decisions on that one. I'll tell you that much. It's been a while since I got super clobbered on earnings trades. So I guess it was just the time. But PA and W did definitely bite me in the butt. I left Texas. Yes, I am in the lovely Pacific Northwest, and let's just say I'm finally in my element. All right, so starting off and looking at the S&P here, generally once you get that initial reaction, you're going to see some upwards movement, you're going to see some downwards movement, and then we're actually going to find a direction. So far, we haven't really found the direction, but when we're looking at this, one thing I'll say, and I got to get my drawing tool restarted here. I had to restart my computer after my CNBC segment. So let me get my drawing tool set up here. Bezo moved out to save taxes and you moved in to make up the difference. Funny. To me, family is just the most important thing. And I wanted to move here to be near my family. And, it's funny because the property taxes are actually substantially less. So it's not as bad as I thought it was going to be. Okay. So looking at this right here now, the main levels that we want to watch on the S&P futures are going to be the highs and the lows on the day. So, anytime we get a breakout from either one of these zones, especially if we start seeing extreme ticks either to the upside or to the downside, that would be up above plus 600, especially up above plus 1,000. That would indicate some pretty extreme buying. And if we get any extreme selling, either one of those options combined with a breakout of either, let's call it 49.85 in the S&P futures or 49.70 to the downside. Obviously breakout here plus high ticks or breakout here plus low ticks. That would be a sign that we could put a day trade on for the end of the day. I think the first thing that I'm noticing is that we have 5,000 in focus. So we do have a, key psychological value up here. And then the key psychological value down below is going to be about 49.60 and then down into 49.50. So I'm going to keep monitoring this. Just within the last few minutes, I mean, we have seen a little bit more buying than selling, but we just never know if that's going to actually be maintained or not. That's why we continue to monitor the market internals to kind of determine which direction this thing is going to go into the end of the day. I have been having a lot of fun with those end of day trades, and I have to hand it to Henry because if it wasn't for Henry just continually saying what a great opportunity they are, probably wouldn't have started doing it. So thank you for that, Henry. Um, when you're looking at the S&P on a higher time frame chart, because the chart that I just showed you was a 5-minute chart, this is going to be a 15-minute chart. What I'm seeing here is that we have a fantastic 15-minute squeeze. And so I do think that we can trade this, one direction or another. I guess I could bracket it and do it either direction, but generally like to at least pick a side. And then look at that. We have a 30-minute squeeze as well. So let's see. We've got so right up into 49.92, 5,000. So let's see what that looks like in the SPX. Okay, so let's see. So we're sitting at 49.66. So yeah, I mean, 5,000. Just got to target those key psychological values. Let me see if there's a lower level though that's a little bit more within the expected range. I mean, we could do 49.80. Let's see, 49.90. It does look like it's a buy so far. Let's see. I also have to tell you that I really appreciate what Henry has said just as far as like just try to take a couple bucks out of it, I think it's a lot harder when you're looking at this and you're saying, okay, I want to get the exact pin because it is harder to get the exact pin. It's not as hard as I thought. Now that I've been trading this ticker a lot, especially if you have a pretty good understanding of the options chain and, high open interest, it's really not as hard as it's not as hard to get pins in the SPX as it is to get pins in an equity, I think. I just think that there's a lot of trade in these different contracts, and I've seen it pretty frequently come up and stick at specific numbers. So, you can go for the pin, but I think just trying to get a couple bucks out of it is a great way to trade it. Right now, it looks like we're moving along to the upside. 49.80 is standing out to me just because it does have a little bit higher volume here. It's not something that is standing out, so substantially that I'd say, got to do it right now, immediately kind of thing. But the 49.80 strike does make sense to me because you have a 14-point expected move into the end of the session. 5,000, even though I like the number, we have some pretty high open interest at that strike. With only a 14-point expected move, I think it'd be pretty unlikely that we get a move all the way to 5,000 unless we start seeing, I don't know, some news related jolt. Um, so one way that we could do this would just be simply to, buy the out of the money fly. That's the way that I've been doing this. Like I said, it's kind of early. For me, I'm very accustomed to trading the last 45 minutes of the trading session, and I get a lot better vibe on which direction we're going at that time frame. So I've been trying to wait until then, and that's been working out pretty well for me. So if we look at 49.70, 49.80, 49.90, a trade like this, it's only going for $1.90. So you have a $10 wide butterfly. You're spending $185 a contract, 200 bucks a contract, to make the max of 800 bucks. So you have a really good risk to reward on that trade. Can you make the full? I mean, it is possible to make the full, but I just, just trying to double it basically. Now, if we flip around the other direction and this thing starts selling off, which I can see that we're down into the negative 500 ticks now. So not super extreme, but we are kind of selling off here. The other level that I think sticks out to me even more is going to be this one right here. So you have 49.50 with 50,000 contracts in that strike. And if you look at the surrounding strikes, that's going to be, a lot more than the surrounding strikes. You have 4,000 contracts in your open interest. So looking at a potential move down into that zone, like let's say this spike up was all we get, and then we just start drifting lower. I actually think I like that a little bit better. Let's see. So if we did a butterfly to the downside. So basically what I do for those of you who are newer to this is I basically just come into the session. I look at the charts, especially right now where the direction's not very certain. I price it out both directions. And then when I start to get my trigger where I can look at it and I can say, you know what? I can see it. We've got negative 600 on the ticks. It's being sustained like it's a short. Then I just go ahead and throw on the trade. So price it out ahead of time just to see what I'm getting myself into. Look at the different risk reward parameters, try to determine how wide I want to make it, and then put it on after. So with the bearish move, this fly is $15 wide versus $10 wide. If I have to pick, I do like to make it wider rather than tighter because the wider range you give yourself, the bigger target zone you have. And so the bigger target, the better. Just like if you're playing darts, you don't want to have like a tiny little target on the wall that's 60 feet away. You want to have a nice big fat target with a big range. So with this one, 49.65, 49.50, 49.35, that's $15 wide, going for a debit of $3.50. You have a little bit better than 1 to 3 risk reward. So I think that's pretty solid, especially with the way that we're starting to drift lower here. So with these, because they are expiring today, you're either going to make money or you're going to lose your debit. So, you have to be willing to kind of put that 300-400 bucks on the table. And if it disappears, then it disappears. And that was your loss for the day. Now that it's already moving, you could lower it a little bit more. So if you did 49.60, 49.50, 49.40 at this point, it's only $1.85 a contract. So less than 200 bucks a piece. And because that one is now just slightly out of the money, you have the opportunity for it to fall into your in the money price point. Um, and that's where you really start making money, because if you have that 49.60 put, instead of paying $5 for that put, you can instead only pay a little bit less than $2 for the fly, because you're reducing your cost basis based on selling these strikes at the 49.50, which is your target. So I do like both of those. I think I'm leaning towards the 49.50. I'm going to let this trade just a little bit longer to see if this thing is going to make a stronger direction known. Um, because generally right after the minutes are announced, you need to just give it a little bit of time. So let's go ahead and look at some of the other tickers that are going to be um, really important as far as today is concerned. When you're looking at NVIDIA, I mean, this is, by far, I think, the most important event of the day that is going to determine the direction in the overall market. So if you're looking at NVIDIA and you're trying to determine, like, what is going to happen with this thing and why is it down, and let's just start with why is it down. Okay, the most obvious thing that I can point to is it's down because we're in a situation where we have a lot of people that are taking profits. I myself, I think I'm going to take some profits on my stock as well. I've been thinking about it all night, and Nvidia has grown to be the number one stock in my stock portfolio just because of how much it's increased. Um, and I've thought about selling it a few times just because of how much it's up. But at this point, I mean, I was getting into it. It was 2019, 2020. There's a couple different time frames where I was buying this stock. Typically, what I do with my long stock is I get into it when it has the weekly squeeze. So this was a moment in time where I was building up my NVIDIA shares. Um, and as you can see, there was this huge move after the fact. And then they basically came down to a loss. And I remember sitting here and I remember thinking, like, man, I got all this money involved and I was up so much. Now it's a huge loss. And what should I do, kind of thing. And of course, that was like the dead low. So I held on to it. Um, and, this move higher based off of AI and everything else has been great. The last move that we got in NVIDIA was the same setup. It was the same setup as when I originally bought the majority of my shares. And so at this point, it's kind of like, well, you know, we all know this is a parabolic move. At the same time, it was a move that occurred with that weekly squeeze. This is a setup that we trade. Whenever we have these red dots, we have this consolidation. We've got a stock that's just building up energy like this. Um, that is a moment in time where you can come in, buy some shares, and this thing will take off. Now, the thing about this move is that it has been so extreme that it has got to come back. Okay. I don't know how far it will come back. I can tell you that when you reach a 2618 extension and go above it, um, that is incredibly rare. So that's why I call it this parabolic move. And it would make sense for it to come back to the 8 EMA, back to the 21 EMA. And I'm just kind of in a spot where it's like, I just got a new house. There's so many things I need to fix. Like, I could just sell half of my NVIDIA shares and, take care of a few different things that I need to take care of. So I do think that I'm going to take some profits on some of this. I can't it wouldn't be strange if it traded all the way back to the 21 EMA. The 21 EMA is at 550, okay? So even just a normal pullback move to 550 is definitely in the cards. I think with Nvidia, the main risk that we have is just the fact that it's so hyped up, it's so priced in. It's just, I love the stock, I love the company. I think everything they're doing is great. I'm not arguing against the future of it. But look at Palo Alto. Okay. Palo Alto is now down 27%. And Palo Alto used to be one of the absolute best and easiest stocks to trade for earnings. This is a company that I've traded over and over and over and over again, just selling put credit spreads, buying bullish butterflies. It's literally like close your eyes and buy it. It doesn't matter. And guess what? Now we have something that was a little bit parabolic, not as much as Nvidia. We have something that now has decreased full year guidance and the stock is down 24%. So, well, it was down 24%. Now it's down 27%. So I do think that it's a little bit of a warning for Nvidia. I don't want, my full stock portfolio getting completely hammered because what was initially a normal size position in my stock portfolio has grown to be the largest position. So you do have to, take off some risk there. I was going to make a separate video about that probably after I do the trading room, but I don't know. It's safe to say as well with Palo Alto, like I lost money on the earnings trades. So there's really no recovery when you get this kind of thing with earnings. Yesterday I came in here and I said like I'll lose like probably $500 if I'm wrong. And it ended up being a little bit more than that because I had a hedge on too. So I went ahead and added a hedge at the end. Um, right now it's showing that the market is like negative. So this number isn't 100% accurate. Because with a butterfly, you're not going to lose more than what you initially put into the trade. So, what's bad about Palo Alto for me was I lost money on the bullish trades. But this is the rare part. Okay. I also lost money on the hedge. And how did I lose money on the hedge? So, my hedge was a butterfly that I placed for a trade that would make me money if it moved about 1.5 times the expected move. This stock has moved now. What was the expected move on here? And you got to pull up my screenshots from yesterday. I think this is about a 3 times expected move at this point. So that is an incredibly rare move. So as far as the Palo Alto trades we did yesterday, it kind of sucks. Like I lost money. This butterfly, let's see, this bullish butterfly right here, the 380, 400, 420, like it's just going to expire worthless. I spent $2.66 on it. Done for. This one, because all strikes are in the money, it's got to be closed. See if I can edge out of it. And this one is a put credit spread. That one definitely has to be closed because these will most likely be assigned if I don't close them. So that didn't work out. I could have added another trade on it this morning. When you see a stock that's getting just completely hammered after an earnings report, generally what you can do is you can add a bearish trade. I think we could probably add another butterfly at 250 because this thing just continues to fall. It has already fallen so much, and I'm already kind of down on the name, so I don't know that I'm super interested in adding more risk to this name. But if I was going to do it, I would look at this $250 strike and just say, okay, you know what? Can I add a bearish fly where I do something like could do 265, 250, 235. So, it adds another $4 of risk. Um, so whether or not that's something you want to do, you can certainly do that. But I do think this is going to keep falling. Now, yeah, you could just do the puts. I mean, you could just buy the puts. See, that the butterflies generally work out really well for me, but I'll tell you in this example, the reason why these butterflies didn't work out well is because it's just way, way past any kind of normal move. So the move that I was looking for would have been a move into this 250 or this 50 simple. So all that being said, it's the first time I've gotten a little clobbered on an earnings trade in a while, so I guess it was my time. Let's go ahead and look at some of these others, and then I'll definitely get to Nvidia. But the idea of doing multiple butterflies out of the money, that's exactly what I was going to do with it. So let me start off by looking at Microsoft. This is one of my absolute favorite stocks to buy and hold and to also trade. This is the number 2 stock in my stock portfolio. And once I sell some of my Nvidia, it may be my number 1. So when you're looking at this, I love this daily squeeze that's consolidating. Okay. Um, this daily squeeze, anytime you can get a daily squeeze on something like Microsoft, generally it's going to fire in the direction of the trend. So you have a daily squeeze right here, daily squeeze right here, daily squeeze right here, daily squeeze right here, daily squeeze right here. This one was just a massive one that consolidated for forever. Daily squeeze right here. So typically, when you get the daily squeeze, especially in the context of a bullish trend, it's going to fire to the upside. We have seen a few times on this stock, like for example, this quarter, it reported earnings, it gapped lower, and then the squeeze actually fired to the downside. This is another one where the squeeze fired to the downside. So it hasn't been as consistent as it used to be. There was a very, very long time frame where, you know, squeeze, buy, squeeze, buy, squeeze, buy. So could this be the pullback squeeze? That's always something that you have to keep in mind. Right now, you can see that it's breaking through the 21. It's trying to hold the 34. This thing has got to hold the 34 EMA. If it doesn't hold the 34 EMA, it has to hold the 50 SMA. I'll say that it hasn't behaved as well as I would have liked to have seen it the past few squeezes. So to just say, yeah, guys, this is a bullish squeeze, like let's trade it to the long side, I think it's a little bit premature. But certainly I'm eyeing the stock for an entry, for a long entry with this daily squeeze. So let's see if it can hold up on the 34 EMA. At that point, may be able to buy it. Would like to try to trade it back up into 420. The other thing that I'll tell you is that this week and next week are seasonally just bearish times in the market. Like it's very normal that we're seeing pullbacks. And the way that Nvidia impacts the market is going to make all the difference in the world. So if you're looking at Etsy, this is another company that's reporting earnings. I struggled with finding something I could do with this stock. The reason why I don't, love a trade on this name is just because it's not very consistent. You have an $8.15 expected move, and it's a $77 stock. So you're pricing in a 10.5% move. Now, if you look at the way that the stock has actually moved, last quarter, 1.1%, quarter before that, 9.2, 2.5, 2.6, 4.3, 5.4. Back, in the bear market, we did have some pretty big moves, 13%, 14%. So when you look at those and you say, well, the stock has moved more than 10% before, but it was a long time ago. It was like when we were in the bear market. Um, so can we do something neutral on it and just bet on the fact that, maybe this time it's not going to move that much? That is certainly something that we could do. So if you look at where it's trading at 77. Um, you have some pretty high implied volatility in this thing. So you can see the way that the vol goes up and it crushes afterwards. It goes up, crushes afterwards. So the likelihood that it stays within a 10% range, especially because it's a little bit range bound right now, I think it's a pretty decent shot. You can also see that, last quarter they beat. The quarter before that, they beat, but then traded lower by 9%. So it's not a really good look. Quarter before that, they beat and traded lower by 2%. So I don't love a directional move on this one. I don't love a directional move on it just because I feel like it's just a little bit all over the place. Let me see. And I think the SPX is just going to continue to bleed here, especially because it's at the lows on the day. We're getting some high ticks. We've hit negative 1,000 ticks a few times. Let me see. So Etsy has 182% implied volatility. Trading at 77 with an $8 expected move. If I don't have a good vibe on which direction the stock is going to go, and I think that the implied volatility is pretty high, this is generally what I will do is I'll just come in and I'll say, you know what? I just want to sell the premium. For a $10 wide trade to get a $6 premium, it's pretty good. You're risking less than $400 for a max profit of 626. With something like this, I would just try to collect like, I don't know, maybe like 40% overnight on it. So if you sell it for, 622, you can just multiply that. 622, see if you can get see if you can close it for around 375 or so just by selling the premium and buying the premium back the next day. You could make a directional bet on it, but when it's half the time up, half the time down, I don't really like to make a directional bet. So I think neutral is the way to go. SNPS, this is the one that I was talking about on CNBC today. I like the stock. I think it's a great stock, great company. I love the daily squeeze. I think it's fine to buy into it now with the daily squeeze and with the $600 price target here. Have another higher price target at 633. But if this does happen to pull back after earnings with a 42-point expected move, you'd just be down into the $500 key psychological value. And if you could buy it at that key psychological value at $500, that's a great spot to buy it, better than buying it at 538. So I think either one is fine, just depending on your risk tolerance. With this one, we're not going to be able to trade it in the options market because it doesn't have weekly earnings or weekly expiration series. I mean, but I think it's good for kind of like a buy and hold, especially because if you're looking for buy and hold stocks, what you want is something that regularly gaps up, trades higher, reacts well to earnings, regularly beats earnings. You're looking for something with a consistent pattern, and this is exactly that. Square, and some of these are just so all over the place. These tickers that are just so all over the place, I mean, it's gonna be pretty hard to find an edge in doing something specific unless you're just selling the neutral premium. So, we've got about an 11%, 12% move that's being priced in. Um, if you look at the moves that this stock has had, 15%, and that was recent, that was last quarter. So if you're looking at last quarter, they did have a pretty good beat there. The quarter before that, they had a nice beat. But you know what I don't like about this is last quarter they had a beat and it was up 15%. Quarter before that, they had a beat and it was down 8%. So I can see the squeeze. I can see that there's definitely something that's about to happen here. A lot of the times with something like this, I'll just you can either make like a bet that it's neutral, the way that I just described with Etsy, especially because this one has a lot of high implied volatility. Um, so you can definitely do something neutral on this. And then when you're looking at a potential breakout, you just want to monitor that expected move. The expected move is $7.66. So if it moves, one and a half times that, um, that's where you're going to have an opportunity to trade a big move after the fact. Yeah, SPX is rolling. So we're going to break the lows on the day here. Let me go back to that. And then I'm definitely going to get to NVIDIA. So I'm not going to post any trades that are just ideas. The trades that I post are the trades that I'm going to take in my own account. But I go over all kinds of ideas, and those ideas are for people to take if they like them and want to take them in their own accounts. But I'm not going to post something that I am not trading because otherwise, like, there's no way for me to manage it. So the posted alerts are the ones that I'm actually taking. Okay, so let's look at this. Yeah, I think we might need to do down into. So we're really kind of falling apart here. It might actually be even lower. So we have the fact that the 15-minute squeeze still hasn't fired to the downside. So we still have more downside pressure there. Um, let's look at our ticks too. We're getting a little bit closer to that end of day time frame where I like to put on the trade. Um, we've had those ticks remaining like pretty negative for the last 40 minutes. So that's going to be, pretty substantial. Um, NASDAQ new low on the day. We're already at that 41.50, 49.50 price target that I had mentioned earlier. So at this point, it's kind of just a function of, if we break through the 49.50, that's a key psychological value. With that squeeze, you've got a 195-minute squeeze there. You've got a 15-minute squeeze there. I think there was a 30-minute squeeze as well. And we're still not even at the time frame of the day where most of the action happens. So what that means is that we could still get quite a bit more movement. Um, the next downside targets are going to be 49.40. And let me see if we could actually do 49.25. It's still just kind of a slow bleed lower. Not really accelerating too much, but I think it probably will on this break. All right, let's see. 49.50. $49.25, 4,900. So if you get something like this, you're only spending $4 to do so. You're basically just, giving yourself a way to participate in the move to the downside if it keeps happening. Now, can it go all the way to 425? Maybe. Sorry, 49.25. I think it's time to close out shorts into this weakness. Market euphoria has come down, that I may be able to actually appreciate the inevitable rock star numbers from NVIDIA. Yeah, how about let's do this? Let me do a poll on NVIDIA, and then I'm going to give you my NVIDIA trade ideas. Let's see what Henry's doing. Henry bought Butterfly, SMCI, 785, 800, 815 call, low risk, low probability, possibly sensitive to NVIDIA earnings, taking a shot against the hedge wall of support at 700. Nice. Hammered weight. All right. What do you think the reaction post NVIDIA will look like? The options are hammered. The expectations are too high, or amazing. It will fly. I don't know. Should I give you a neutral opportunity? Premium crush. No big direction. Okay, so you have 3 choices. I'm sending this poll. I want to hear your answers, and then I'm going to show you what I think we can do with it. Hey, Danielle, can you talk about Tesla and DE? I'm new to trading. What platform are you using? I'm using Thinkorswim. So I like Thinkorswim because it's a really good options platform. I utilize the options chain. I also have a ton of custom tools that I use that have all been coded into Thinkorswim. It tends to be pretty good for that. So we have a developer that we work with here who's amazing, who just comes up with all of the stuff that we envision. And, for example, this one just gives me all the earnings data that I need. I think that the biggest risk with NVIDIA is it's kind of similar to what happened with Palo Alto, in the fact that Palo Alto had been it had been doing really well. It was flying on earnings. NVIDIA last year it had 1, 2, 3 like big moves higher. But then you see what happened here was we got just this one little move last quarter where you could start to see that excitement die down a little bit. I don't like that. I think that's, if you look at what happened with Palo Alto, like it's pretty similar. You had these big up moves, a lot of excitement, and then you had one down move, and investors thought, okay, well, it's not as good as it was, but it's still all right. They came in, they bought the stock afterwards, and then you just get completely trashed. So I do think it's important to set up going both ways. If you look at the analysis here and you look at where this could potentially go, I think that it does make sense to place trades in both directions. I don't know that I personally want to do the neutral move today, but I'll set it up for you and you can see what it looks like if your risk to reward makes sense. So basically the way that I do this is I set it up both ways and then I just figure out, which direction I'm going to go with it and you can kind of pick which direction you want to go with it yourself. Um Man, looks like my poll is here we go. All right. So for those of you who are in the Simpler Central room and you can see the results, for those of you who are not, we have 36% of people saying that they think it's going to get hammered because the expectations are way too high. 19% of people saying amazing, it will fly, and 45% saying premium crush, no big direction. All right, so let me just go ahead and start off with that. And if the SPX isn't going to move anymore going into the end of the day, we might be able to just do a premium crush trade here. Let me just set this up really quickly. Yeah, it's already down 10%. So sometimes I've been able to snatch a couple dollars out of the market with these just neutral iron condors. So with the SPX, it's kind of already fallen. We've seen some selling. We have that high open interest at 49.50. We're already trading there. If we're not going to get too much more movement into the end of the day, this might be the thing to do. So let's see. Do you see how you can get a $6.70 credit on this for options that are expiring today? And this platform has been a little bit sticky today. Come on, go in the wrong direction. I think I might end up doing this. So look at this. $10 wide, $6.65 credit. You're only risking like $330. You're not really going to go for the max profit. Generally, I'm trying to go for about 50%. So it's about 1-to-1 risk reward ratio. So I think I might actually end up doing that. Let me just say that. But I know we have to get to NVIDIA, so I'll let you know if I end up doing that. Okay, so for NVIDIA, here's the thing. We have an expected move of $64. So what I want to start by doing is I want to align. Come on. There appears to be a problem with your Thinkorswim performance. Yes, I know. Thank you. Send a report to the development team. Can get a little bit sticky on days like this. NVIDIA. President of NVIDIA said they're in the third inning of a 9-inning game. Sounds like he is hedging short-term expectations. Hey, yeah, that's a very good point. Okay, so if we look at where support is, I mean, you can see that there's some pretty critical support at that $600 price point. You have the expected move as well that aligns pretty perfectly with that. So you've got a $64 expected move. So I mean, I think that it makes sense to just place a lotto fly at the $600 price target. With that $600 price target, PA and W at its 200. Yeah. Let's see. Okay, do you see all that open interest there? 15,000 contracts. All right. So with the butterfly, basically what you do is you determine your price target. So this would be a trade at the expected move. Now, keep in mind, if NVIDIA gets completely toasted, it's going to go through your expected move and it's not going to work. So if you did something like, even if we did like 6, so we just start with the target in the middle and then try to figure out how wide we can make it. It just depends on what you're willing to risk. I think $11 is way too much for risk on an earnings trade. I try to keep these trades down to, 1% of my account. So just depending on account size that you have. But even that is still I just don't want to do that. So that means that I would need to just tighten this up. So let's try to do it $25 wide, see what that looks like. Okay. So at this point, you have 625, 600, 575. So you basically have a $25 wide target that you're paying $3 for. What that would mean is that if Nvidia, falls down into the $600 strike, that's the spot where you could really cash out because you're paying $300. Your max profit is 2,200. This is generally a pretty good way for me to place bets in the options market because it's pretty low risk, pretty high reward. But you are paying a debit, and if you pay the debit and it ends up down here, like let's say it has twice the market maker expected move and it's down like $100, then you would lose money. You've got another target down here at 550. So if you really wanted to place like a if the whole world falls apart kind of thing, what would that look like? So let's see. So if we did 550. So again, you just start with your target in the center and then you just try to figure out, how much am I willing to pay to see if this idea will come through? And it's always buying a butterfly, not selling it, by the way. So let's see. Let's do 575. 550. 525. Okay. So what this would be is this would be a hedge, basically. If the market, completely falls apart, if Nvidia gets trounced, it's down $100 tomorrow, then how can you make some money? You can pay $1, less than a dollar, for, $2,500 reward. Now, obviously, that's going to be a low probability thing, but based off of what PANW has done, it's not out of the realm of possibility. Now, for those of you who are more interested in making a new, not a new, but making a neutral bet with the idea that, you know, maybe it's not that bad. Maybe the move is already priced in. The way that I would do that is I would start with 665 as your center strike. And then basically just whip out your handy dandy calculator so you make sure you don't mess up your strikes because it has happened to me. Oh, no, wait. Actually, I think I want to start with 670. So let's do 670. We could try to add 65 to that. So that would bring you up to 735. Let's see. 750 does have a lot of open interest there. You just want to make sure you have enough liquidity in your strikes. So we could do 735. We did 670. 605. I think it'd be better if we did even strikes. So where's the fire line? 670. Let's do 740. 670. 600. All right. So this would require, a larger account to do something like this because you have a $70 wide Condor that you're selling and you're getting $48 of credit. So you do have some pretty substantial risk. I don't think that you could or should do it if you have a small account because making it tighter is just not really an option because you need when you're selling premium on something and you're making a neutral bet, you need to make sure that you have enough range so that this thing could actually come into your range. So, the way that it would work is that you're selling this thing and you're getting $48. And so if it moves less than $48, you can buy back the premium that you sold for a profit tomorrow. If it moves more than $48, that's where you start losing money. And then you'd have to, you know, potentially spend up to $2,000 a contract buying it back. So I'm not going to do the neutral bet because that's more risk than I want to take on an earnings trade. Um, I'm leaning towards the $600 butterfly. Um, the other one that you could do is the 750 fly to the upside. So if you did, you see how you have 10,000 contracts there? So you can do, let's say 725, 750, 775 for $1.73. So if you think Nvidia is just gonna, rocket, paying less than $200, you do have a butterfly that's pretty far out of the money at 725, but it is also within the expected move. So it's not out of the realm of possibility that this thing trades up into 725, 750. I think it's fine having them on both ways. There's days that I just can't make a decision and I'm looking at the chart and it's like, well, Nvidia is so great and we love it and blah blah blah. Like, let's just be long. But then there's also times where, you have to take into account that this is like the most hyped up stock in the market right now. And so I think that the biggest risk is just that this report has to be not just good, not just great, but it has to be absolutely freaking fantastic. It has to be like the best earnings report you have ever heard in your life where, you know, investors are just going to jump for joy in the streets. Otherwise, the thing's going down because it's already had this massive, massive move. So I just feel like it's fine to put a target up at 750 if you're going to spend less than 200 bucks. Um I think that it makes more sense for it to pull back. I think that if you are sitting on a lot of profits in it, it makes sense to be cautious and take some money off the table. Um, but ultimately, what this ticker does is going to determine what the market does tomorrow. Um, I can look at any of these other charts for you, but if Nvidia gets hammered, every single one of these Magnificent Seven stocks are going to go down, is what I think. So, Tesla, Tesla couldn't get through 200. Tesla's got a squeeze starting, it's in a downtrend. So, I think Tesla's more likely to trade down into these lows at 178 before it trades higher. I would not be opposed to shorting Tesla, especially if Nvidia gets hammered. Uh, John Deere, I think that it's a great stock long term, but it's been a little bit lackluster lately. You've had a couple earnings reports in a row. Even though they've beat EPS estimates and they've done well for the most part, the stock just keeps trading lower. So I don't like that. I do like the fact that it still has a lot of consolidation on the weekly chart. So I've been buying long stock in it because these consolidations just tend to break out. If you look at the reason why Nvidia is where it's at now, it had that consolidation on the weekly chart before it finally broke out. Same thing with John Deere. So I've been buying shares in John Deere. I know it hasn't been doing that great recently over earnings. But, well, I would say that it has been doing great. The reactions just haven't been great. So, anyway, as far as this SPX day trade, I'm interested in hearing what Henry has to say. I think it's either going to be neutral, like let's just sell the premium at 49.50, or we end up breaking lower. But I really need to see what the ticks are going to be like in the next 10 minutes to make my final choice. But my time here with you is up. Thank you so much for joining me. I'm looking forward to seeing what Henry has into the close. I hope you have a great rest of your day, and I'll